What's up, guys? It's your boy Ray back with another fire video. Today is October 25th, Monday, October 25th. It is currently 7:13 a.m. in the morning. As you guys know, I'm here in San Diego, California. So the stock market roughly opened 45 minutes ago. It opens here at 6:30 a.m. So I wanted to just hop on and do a little overview, see what's going on, see what's moving. As you guys see, I already got the Wall Street Journal up here on my end. And as I said in my last video, love the Wall Street Journal. Highly recommend if you are an investor or someone who has an interest in the financial markets. Definitely take a look at Wall Street Journal subscription. But let's see what we got in the market today, guys. It looks like we got green all across the board. Something I really want to highlight in this early morning video is the price of crude oil is $85.20. This is its highest price point since 2014, which I recently read in this article here that we're going to review as well. Looks like the yield on the 10-year is 1.63. We should know that there's an inverse relationship between the 10-year yield and its price. So when people are buying bonds, it pulls the interest rate of those bonds down. People are selling bonds, it shoots the interest rate up. So we're seeing green here for the 10-year yield, which means people are selling bonds today. NASDAQ is up 0.34%, S&P is up 0.08%, and the Dow is relatively flat. So let's just jump into this article that I was taking a look at this morning. Stocks creep up ahead of tech earnings, right? So we got, once again, guys, it's Q4, the beginning of Q4, which means the end of Q3, which means we have earnings going on. Benchmark WTI oil trades above $85 for the first time since 2014. I thought that was crazy. And it's funny because a few months ago, back when oil really started to creep up, this was back in, maybe back in April. And it was around, I seen it was at that $70 a barrel range. And for me, that was surprising. And I'm like, there's no way it's gonna, keep going higher. But what happened was I ended up making a few plays and, going long on a few oil and gas companies. I actually ended up making some decent cash from it. So, I didn't think it would continue to go higher, but at $85 a barrel, this is crazy. And there's been historical time periods where there's been points in history where oil was trading above $100 a barrel. So we'll see. I know there was some recent deals with OPEC maybe a couple months ago where they agreed to, I think it was maybe ramp up production to kind of deal with this excess demand that we're seeing, but doesn't look like they're doing too good of a job. So, but let's check out this article. U.S. share benchmark edged up ahead of big week of earnings for major tech companies. S&P ticked up 20 basis points Monday, pointing to an extension of last week's rise, which saw the broad market index climb 1.6% and hit a fresh high. It almost feels like we're hitting highs on our broader indexes every single week, guys. This is crazy, man. Crazy time period that we're in. NASDAQ Composite Index added 0.4 or 40 basis points, suggesting gains for tech stocks to start the week. The Dow Industrial Average rose 20 basis points. So let's look at this right here. Facebook is scheduled to report their third quarter results Monday after market close. So this afternoon, we're going to be getting Facebook's earnings call. What do you guys think? Is Facebook going to beat? I'm going to do another video once they go over the earnings and we can have an in-depth discussion about it. Maybe I'll even hop on the earnings call. For those of you, I want to make you aware, these earnings calls are available to the general public. So if you were to go on Facebook's website right now, there would be a way where you could listen to the earnings release live when it goes on. So I don't know, that I've done it a couple times. It's pretty interesting to listen in on these calls and see what the CEOs and executive and C-suite guys are saying about the stock. What else we got? So we got Microsoft, Twitter, and Alphabet, which is Google's parent company, also scheduled for an earnings release on Tuesday. And we have Apple and Amazon.com are expected to report later in the week. So this is a huge week for earnings, guys. We got some titans this week. We got Apple right? Which everyone loves Apple. What is it? I mean, it was like 16 billion, probably more than that at this point. $16 billion in cash on their books. It's a cash-rich company, right? And we got Amazon, which is just a giant. Then we got Microsoft, Twitter, Alphabet. I mean, we got some crazy earnings this week, guys. Let's read this next paragraph here. Shares of PayPal jumped 5% after it said it wasn't pursuing a takeover of social media country Pinterest, pushing back against reports last week of a potential deal that sent the stock down. So wait. PayPal is not buying Pinterest. And it looks like they came out recently and said that, hey, the reports that you guys were reporting last week are false. We are not buying Pinterest, which is crazy because where does that news come from? You know, like who just made up that news, you know? But so that's interesting. I was actually kind of interested in seeing more of what that would play out to be. But I guess we're not going to see that, guys. Let's see strong earnings from banks, consumer companies, manufacturers sued. All right, guys, so I took a little brief intermission, and here I am back. Now, this time around, I got TD Ameritrade pulled up. This is my old TD Ameritrade account. And we got real-time quotes, so this is pretty awesome. Let's just, look at... So now it's 8:57, so it's been about an hour since that last segment. Here, still looks like things are pretty flat. Here is the NASDAQ composite right here. Up 16.16 points. Dow was up 38 points, 39 points, and the SPX, which is S&P 500, is up 13 points. Let's see. I like just playing around with some of these things here. I want to look at some of the movers today. I'm going to go to scan. I'm going to go to Market Watch, visualize. Breaks it down by indexes right here. Let's look at the Dow. So we know that Microsoft, I think they report earnings. Like I said, Microsoft reports earnings at today's close. Microsoft, let's see. Pull up a chart. More info, Microsoft. Quick quote. Let's do a quick quote. Looks like Microsoft got pulled up here. No, this is Let's go to monitor. We'll do charts actually. Now let's look at Microsoft, huh? Microsoft is a $300 stock, right? I don't know. That's pretty expensive. It's a good one day. Yeah. So I think they report earnings at market close. Microsoft says SolarWinds hackers may have breached 14 more companies. That may be rather down today, 1.47. Big earnings week ahead. I said this week, many Wall Street darlings are set to report their latest quarterly results, given the trend starting. Expect the results have been posted by now. Facebook. Let's see how Facebook is doing today. So Facebook reports earnings at market close today. FB. Right, and yeah, Facebook whistleblower, Francis, who can cause for new tech laws in Europe. Right, so I'm curious to know. I mean, Facebook has faced a lot of backlash within the past few weeks here with the recent whistleblower coming out and kind of exposing some things on Facebook's end. And let's see, bad news. The Facebook does not extend to its earnings. Facebook earnings preview. Social media giant has avoided fallout from several high-profile missteps in recent months, but financial problems could be on the road ahead. Facebook Inc.'s Teflon Sheen has been impenetrable, even as the past few weeks of bad news has put its brand name and investors in such tests that the company is probably planning a name change. How do you guys feel about that Facebook name change stuff, man? Honestly, I heard it's actually just a holding company or something like that. It's not like the Facebook, right? It's just a holding company, but I don't want Facebook to change its name. I think that'd be bad for marketing. I think Facebook has built up such a reputable brand name that it would be the dumbest thing in the world to actually change the name. But like I said, I don't think they're actually going to change the name of the platform itself. It may just be the holding company. So I don't know. I don't think it's a good idea though. Financially, though, the worst may be yet to come for the social networking company as the specter of Big Apple Inc. Specter of a Big Apple Inc. change and choked supply chains could weigh on the company's finance along with the big outage. Facebook has gone through a meat grinder of bad news cycles this past few weeks, yet few believe those issues will derail revenue and shares. Consider the past few weeks. I'm going to show you guys something cool that you can actually do on Thinkorswim that I enjoy doing. I think you go to Analyze, and if you type in a ticker symbol, so boom. So this is something awesome that the Thinkorswim platform has, and this is something that I know a lot of guys, especially if you're day trading, you're more of a technical analysis. For my swing trader guys or even my long-term investors such as myself, pages like this are super informative. So, this shows, I think what TD Ameritrade research team, the weightings that they give it, right now they have Facebook as a hold. The street has it as a buy, and market edge has it as an avoid. So polar opposites are here, right? But I really like this because for my fundamental guys, it provides a high-level overview of some of Facebook's key financials and any other stock ticker that you type in here. It gives you their earnings per share data, their dividends per share, book value per share, free cash flow per share. If you look at the free cash flow per share, in 2016 it was $3 per share, boosted to $5 in 2017, boosted to $5.78 in 2018, fell back to $4.85, and then in 2020 it was $9.13. Looks like 2020 was a great free cash flow year for Facebook. Then they even give you some profitability ratios, return on equity, return on assets, gross profit margin. I love looking at margins. And in typical financial statement analysis, you're looking at things like margin, gross profit margin, net profit margin, and you're comparing it to industry standards. So, for example, if you're looking at, Facebook, which is a social media platform, you're going to look at their margins and you're going to compare it to maybe a Snapchat's margins or a Pinterest margin or, any other social media platforms out there, and look at their markets. Maybe even Google, since both Facebook and Google are big in the online advertising space. So net profit margin here, 36%, 39% in 2017, 2018, 39%, 2019, 26%, and then 2020, 33%. So basically what that's saying is for every dollar in total sales and total revenue, they keep 33 cents of that, right? So once again, you really can only judge it when you compare it to other industry or other competitors within their space as well. Total asset turnover, inventory turnover. Financial ratios are huge in fundamental analysis. Long-term debt to capital, financial leverage, fixed charge coverage ratio, dividend payout, quick ratio. Quick ratio is just total assets divided by total liabilities, I believe. So just, different financial ratios here, valuations, PE, valuation highlights, and they even break down some company-specific details. So latest earnings for Q2 2021, Facebook reported revenue of $29.1 billion. Impact of coronavirus, IT software and services industries are suffering from a fall in demand for software and web services, as consumers are focusing solely on essentials and not discretionary products. Summary advertising. What I really like to see is on this thing is it breaks down the how their revenue breaks down, right, and what's really generating revenue and sales for the company. Like, what's the largest percent of their total revenue? What business unit is doing that? And you can see what Facebook. Their core Facebook advertising is responsible for 93.8% of Facebook's revenue, right? So really, the majority of Facebook's revenue comes from advertising. Wow, look at that. From 40 billion to 200 billion, right? It's just ridiculous, man. So 93.8% of Facebook's revenue comes from their advertising platform. So I'm curious to see when they release earnings this week or after market close today, how profitable was their advertising last quarter. Me personally, as someone who runs an e-commerce business, I know that I personally do run Facebook ads. Facebook ads are incredible, and I'm a small, micro scale e-commerce platform. Imagine the bigger guys, how much they're spending on these platforms. So 93.8%, guys, of Facebook revenue comes from their Facebook advertising. Crazy. Absolutely crazy. Let's look at some. Let's go back to Wall Street Journal here. See if we got any other good news out. Markets are still pretty flat today. PayPal abandons Pinterest takeover after its shareholders balk. Really? Let's like I said, man, I didn't think that it was a good idea in the first place. I'm just asking myself, like, how does a payment merchant provider like PayPal integrate Pinterest? I don't see it. And you're talking to someone who's actually ran Pinterest advertising. So it's just, I don't know. PayPal abandons Pinterest takeover after its shareholders balk. Media last week reported two California-based companies were in early stage talks for a deal. PayPal Inc. backed off of a takeover of social media company Pinterest after shareholders reacted negatively to what would have been a multi-billion-dollar bet on e-commerce. PayPal said Sunday that it was not pursuing an acquisition of Pinterest at this time. Phone is ringing. Give me 1 second, guys. So back into this PayPal article. PayPal said Sunday it was not pursuing acquisition of Pinterest at this time. The deal talks, which were confirmed last week by the Wall Street Journal, but not publicly acknowledged by either company, would have combined a payment giant with broad financial ambitions with an image sharing site that has struggled to commercialize the effects of its users. PayPal shares fell almost 12% in 3 days after the media reports a sign that investors doubted the wisdom of the deal. They were up as much as 5% in early trading Monday. A deal for Pinterest with a market capitalization of more than $37 billion. Jesus. Pinterest is huge. $37 billion. Pinterest is a $37 billion valuation. That's crazy. Or market capitalization, my apologies. Would have been one of the biggest mergers of the year, and PayPal is the biggest ever acquisition. Pinterest 454 million monthly activity users. Shares post about everything from fashion to home design. I just don't get how these two would have been integrated. Buying Pinterest would take PayPal from a checkout option at the end of an online shopping excursion to its start just as consumers are browsing digital aisles. Buying Pinterest will take PayPal from a checkout option. Interesting. The deal's first undoing was reminiscent of Salesforce.com Inc.'s abandoned takeover pursuit of Twitter in 2016. Both were deals by tech royalty for buzzy, beloved but less profitable platform. Salesforce stock fell. PayPal's record as an acquirer may also give an investment. Let's see how PayPal's doing it. I'm sorry, I don't know why that keeps popping up. It's pretty annoying, actually. PYPL. Let's take a look at PayPal today. Apparently, it's not doing too hot after abandoning its acquisition. PYPL. PayPal Holdings. Once again, another expensive stock. Look at this, right? So this was Friday. This looks like Friday here. Yeah, this was Friday. $2. It was trading at $238.90, and then it had a big pop upwards here. Looks like it hit a high at $257.99. Jesus, right? And then, so this is a great flag pattern actually right here. If this was, I don't know. Obviously, this doesn't seem like too active of a security. If you look at the volume, I'll give you a volume for this. But PayPal, looked like it shot up a lot after hours, and then it opened and it closed down a little bit. Looks like it opened at 25496. Now it's at trading at 249. But it's also up $9 from yesterday's previous close. Sheesh, man. PayPal's kind of expensive, man. I don't know much about their fundamentals. Let's go and look at let's go back to our analyze and see if we can pull up any PYP, see if we can learn anything unique about PayPal here. So looks like TD Ameritrade's research team gives it a hold. The street gives it a buy. The market edge gives it a void. Market edge, twice that we've seen a void. Market edge, maybe they're bears, huh? Current annual 19.58. Their margins their net profit margin has improved over the years. At least in 2020, they had a smash, and I think e-commerce in general really crushed in 2020 due to pandemic, right? People were unable to go shopping in brick and mortar institutions, so they were buying online, and obviously PayPal being a merchant I use for a little bit as well for my online store. I imagine that they did relatively well during that time as well. Financial ratios, their current ratio, so their current assets minus current liabilities, or current assets. It's current assets over current liabilities. 1 point. So for every dollar in current liabilities, they have $1.32 in current assets. See, PE 65, 5-year average. I want to see, do they break down? Looks like they don't break down there. Look at their revenue. So it even gives you the revenue growth rate. So 3-year average, what's that, 17%. 5-year average, 18% growth rate. Current is 24%. Right, so it looks like their revenue, like I said, 2020 was clearly a good year for this company. Their 5-year average, 27%. Their current year net income is 88. Interesting, man. But yeah, PayPal's up $9 today. After not buying Pinterest. Interesting. So it looks like the market was just as confused as me in that regard. Let's see if we can see anything else. HSBC to buy back $2 billion in stock as profit jumps. The London-based lender posted a surge. So buybacks, stock buybacks, right? I don't know if you guys are familiar with stock buybacks, but put it to you like this. When companies have excess cash on hand from operations, so think of a statement of cash flows for a company. In your statement of cash flows, you have cash from operations, then you have cash from investing, and then you have cash from financing, right? Cash from operations being the first column on a statement of cash flows, right? So cash from operations is your net income, adding back in any non-cash expenses. So adding back in depreciation, adding back in, accounts receivable, adding back in accounts, changing inventory, adding all that stuff in. That's your cash flow from operations. And in finance, cash is king, right? In finance, cash is king. So companies that do a great job at generating cash from their operations, what they then do is they take that cash and they can do two things with it, right? They can either A, return it to shareholders in the form of a dividend, or in essence in the form of stock buybacks like we're seeing HSBC do here, or they could take that cash and they could reinvest it into the company, whether that's buying assets, right? Buying property, plant, and equipment, buying new warehouses, buying more inventory, buying new equipment to operate more efficiently, investing in research and development, right? So there's two things that companies can do when they have excess cash. Give it back to the shareholders in the form of dividends or stock buybacks, or reinvest it in the company. So HSBC has decided to buy back $2 billion in stock as their profit jumps. Let's check this story out, man. And so HSBC is a London-based lender. London-based lender. Profit rises as bank releases funds it had set aside for potential pandemic-related loan losses. So HSBC announced a $2 billion stock buyback and a surge in third quarter net profit as the lender navigated rising geopolitical property market risk in China. The London-based bank earned $3.54 billion in 3 months. Jesus, man. The scale of these companies is ridiculous, man. $3.54 billion in 3 months to the end of September, up from $1.36 billion in the same period last year. So they made an additional $2 billion this year. Its profits were lifted by the release of money it had set aside a year ago. Okay, so now it starts to make sense, right? It's not because they made more money on their lending or did more loans, or it's not because of that. It's because they had set aside all these funds as like loan loss reserves during the pandemic. So basically they're taking these funds back, and that's why their profits were boosted. This is about releasing money had set aside a year ago when banks were bracing their loan books for widespread pandemic-related defaults. Those losses mostly haven't materialized. As the global economy recovers, banks have been releasing past revisions while setting aside less for current loans, boosting their profits. Analysts had expected HSBC to report profit $2.22 billion. Revenue was roughly flat. I want to see. Talk to us about the share buyback. HSBC is sharpening its focus on lucrative Asian markets. You and everyone else, man. Fucking India. Pre-tax profit from mainland China. HSBC's close money. I want to see the share buyback. The bank last month paid out an interim dividend of 7 cents a share for the first half of 2021. HSBC said Monday that it wouldn't pay quarterly dividends this year, but will review whether to do so by the time of prudence. The bank is considering 3 or 4 acquisitions to boost its Asian wealth management. Talk about the buyback, the share buyback. Thanks. Here we go. While we retain a cautious outlook for the external risk environment, we believe that the lows of recent quarters are behind us. I do too. HSBC Chief Executive Noel Quinn said in a statement that, along with the group's strong capital position, enabled HSBC to announce a share buyback of up to $2 billion that will commence soon, he added. So, like I said, two things that companies do with excess cash: reinvest it in the company, or pay it out to their shareholders in the form of dividends or share buyback. So what happens when a company, in essence, buys back shares? Well, one of the things that happens is their shares outstanding amount decreases, right? And what happens when your shares outstanding amount decreases? Well, it does a lot of things. It makes some of your key metrics look better. For example, earnings per share. Think about it. If earnings per share is a function of net income over total shares outstanding, and we reduce that total shares outstanding amount, your earnings per share number is going to be larger, right? So buying back shares, although it does things for shareholders, it's also great for the company, because it makes a lot of their per share metrics look a lot better. So HSBC says it will buy back $2 billion in shares. What's the price of HSBC if you guys want to consider buying it? HSBC. I don't know what this stock is. HSBC. Is it HSBC? HSBC PA Holdings PLC redemption $25 share. I don't know what that is. Global. Oh, here it goes. HSBC Holdings PLC. It's all there. ADR. Oh, it's a $30 stock. Evergrande doesn't cloud. It just be still buy back too big. So they're up 45 since today, or 1.52%. This is a relatively cheap stock. Let's see what the trend's been for the past year. So it looks like it started off, well, back in November. It was trending upward, and it's kind of started to lag. Got some downward, some lower highs and lower lows here. Maybe this may have been a catalyst to reverse this sell-off. Big jump here in October. Interesting, man. Like I said, I mean, the news isn't that amazing. I mean, hey, we're buying back stock because we were expecting these losses in our loans, but it never happened. So now we're just going to use that money to buy back stock. Sure. Let's see. Anything else that we can touch on in this? Any meme stock going crazy? Fed prepares to taper stimulus amid more doubts. I want to do a whole video on the Fed and its taper plans, and this whole temporary inflation thing. And is it temporary or is it not temporary? I would love to do a video on that, dive into deeper detail about that. Anything else? Federal Reserve face tougher. Volvo IPO price is lower than expected despite ambitious EV plans. Yeah, freaking Volvo is about to IPO real soon. You focus digital platform, FaZe Clan Inc.'s $1 billion SPAC deal. No way. What, dude? So I've heard about these guys. These guys are like gamers. $1 billion SPAC deal. Wow. Youth-focused digital platform FaZe Clan Inc.'s $1 billion SPAC deal to go public. Wow, these guys are gonna become fucked. These guys are gonna be fucking multi-millionaires. If they're not already, they probably are. Backed by singer Pitbull and other entertainment and sports celebrities, FaZe Clan targets Gen Z millennial consumers. Youth-focused online platform FaZe Clan Inc. is combining with special SPAC company to go public with roughly $1 billion valuation. Wow. So, special purpose acquisition company. I'm sure you guys are familiar at this point. DWAC was another one that recently just went crazy. Based in LA, FaZe Clan markets itself as a leading online gaming company and brand created by young people that targets millennials and Gen Z consumers. Its business includes sports. And the company website says FaZe Clan has a global reach to a community of roughly 350 million users. Founded in 2010. Partnerships with large brands such as McDonald's. Wow, these guys are crushing it. The company is merging with SPAC. B. Riley Principal 150 merger. Wow, a blank check company. Wow. FaZe Clan growing digital platforms that flocked to SPAC deals recently to raise large sums of money and increase brand awareness by going public. Past few years, sports betting from DraftKings and mobile games. Wow, dude. Man, so as far as the SPAC deal, FaZe Clan is raising about $120 million through a private investment in public equity. PIPE. I learned about those before. Private investment in public equity. The B. Riley SPAC has about $170 million. Some or all of that money could also increase FaZe Clan's cash proceeds from the deal. So for those of you who don't know, when these companies IPO and millions of people buy their shares, that money goes to the company, guys. It goes to the company. Now, for a SPAC, it's a little bit different because it's in essence a blank check company that's going to be used to purchase a company, and the funds have to be used for that. But still, guys, that money goes to the owners and the board and the guys who have majority ownership in that company. So it's a big payday when these guys IPO. This is huge. Low shares prices often motivate a SPAC. The B Riley has about $170 million. Somewhere that could also increase FaZe Clan's cash flows from the deal because SPAC investors have the right to withdraw their money before the merger is completed. SPAC's cash flow can dwindle before deal gets completed. SPAC is a shell firm that raises. FaZe Clan projects this year's expected sales of roughly $50 million. These guys are doing $50 million in revenue a year. This is crazy. The company is unique because it can expand without burning much cash, said Dan Schreibman. Interesting. It's very different than a lot of other explosive growth companies. SPACs were hot investments early this year. This fading popularity. This is insane, man. So basically, these guys have a $1 billion SPAC deal to go public. They're going to be merging with B. Riley Principal 150 Merger Corp. It's freaking amazing. Freaking awesome. Wow, that's incredible, man. Shout out to the FaZe Clan boys, man. I recently seen them on a show that I watched called Cool Kicks. Shout out to Cool Kicks. Shout out to these boys, man. Damn, they're about to get paid. They're about to get paid, guys. Check out that story, FaZe Clan. I know a lot of you guys are maybe gamers out there. That's a crazy story. Look at this Tesla up $68. Jesus, Tesla just huge price swings. Definitely going to be over $1,000 stock eventually. I wish I would have got in when it was like $200. Wow, man. But hey, there you guys have it, man. Kind of a long video, but like I said, markets are flat today. Some interesting news out there. Earnings. Facebook, once the market closes, we got Microsoft this week. We got a number of different. We got Amazon. We got Apple this week. Try to tune in to some of those earnings calls. Like I said, guys, they're absolutely free. If you go on the website and go to the investor relations page, I'm sure you'll find a link to join that call and listen in on these earnings. Those maybe you can make some money in this earnings week. But all right, guys, your boy Rob Ray. Peace. We out of here, boys.